Good morning. I have come with module 13.4. So I told you this module 13 is about deductions from gross total income. Module 13.1 I have explained the deductions related to section 80C. Module 13.2 I have explained deductions with regard to donations 80G. Now module 13.3 I have explained four sections: 80CCC, 80CCB, 80D and 80DD. Now this last module I am going to explain 8 sections. See, most of the sections are important from the point of view of theoretical aspect. But these sections are also mentioned in your syllabus. Sometimes you may get questions. See, we are going to explain sections relating to savings bank interest 80TTA. But when it will come to senior citizens, it is 80TTB. Similarly, royalty and patents deduction. That is, royalty and patents, we are eligible to get 3 lakhs deduction. So that also we are going to explain in this module. Then dependent relative, treatment for a dependent relative. Then physically handicapped assessee. So all these sections we are going to cover, and I will tell you where it is important from the theoretical point and where it is important from the question or the problem aspect. Now you have to remember one thing. See, in the case of a physically differently abled person, then the question, the first two lines of the question, it will mention that Mr. A differently abled person. So some students I have seen that they will not read the first two lines. It's very, very important, because if you will not read, sometimes they are not able to know the time management and all in a hurry burry. What they will do, that avoid those two lines. They will think that it's compute the taxable income. They will not give much importance for that. But that two lines also has got importance, because sometimes some deduction you have to do on the basis of that explanation given there. So this is very, very important. And this module I'm going to explain with the help of PowerPoint presentations. So happy learning. So we will see with the last module 14 in the next last, that is the income tax computation or the tax liability, and that will be the last module. Then I will be seeing you with the new subjects. So I want to upload as many subjects as possible. So now I'm going to do first year CBSE accounts, 11th accounts, then business law for first year BCom. So the statistics, there is a lot of request. So this is what I'm going to do. So you be with me and you learn with me the subjects, and you give me your valuable suggestions and feedback. So the deductions I'm going to cover: 80GG, 80GGB, 80DDB, 80QQB, 80RRB, 80TTA, 80TTB and 80U. So 8 sections I'm going to cover in this module. So we will see the modules one by one. So the first section is medical treatment of dependent. So medical treatment of dependent, you have to remember, this is allowed to individuals and HUF who are residents of India. Please remember that if you are a resident, then only you are eligible to get this. And you have to remember that individuals and Hindu undivided family are also eligible to claim this. Next thing you have to remember, expenditure incurred on self or to save the life of a dependent who is suffering from a notified disease. It can be parents, it can be a brother or sister who's not married, who's living with the SSC, or the own children who are physically differently abled. Then you can claim this deduction. So this deduction is allowed if actual amount spent for rupees 40,000, whichever is less. So this medical treatment, you know that medical treatment is very, very expensive now these days. If you get a cancer, any kidney disease or any transplantation, Parkinson's, COVID-19, all these cases, expenditure will be very difficult. Even if it's organ replant, then heart disease, open heart surgery, any surgery, it's very expensive. So this is to help the SSC who's taking the care of the treatment of a dependent relative. It can be children, own brothers, sisters, parents, anybody. So notified diseases include cancer, Parkinson's, AIDS, COVID-19, all that. So what the deduction they will get is, actual amount spent or rupees 40,000, whichever is less. Actual amount spent or rupees 40,000, whichever is less. So there also one adjustment is there, you have to remember. See, for example, if I had spent 50,000 in this case for a dependent relative, in that case, comparison is between 50,000 and 40,000, the statutory limit. So I will get 40,000. But there is one condition you can see in the next point. See, if an insurance company is giving you some compensation for this treatment, you will have, most of the people will have insurance claim. So they will submit with the insurance company. Sometimes you will get the full cover, sometimes you will get partial cover. Imagine if you are getting, for my 50,000 claim, I got 20,000 from the insurance company. So the actual amount spent will reduce to 50,000 minus 20,000. It is 30,000. Now the deduction comparison is between 30,000 and 40,000. I will get only 30,000. Now, so that is the next point. Amount of deduction will be reduced by the amount of compensation received from the insurance company. Now, in the case of senior citizens, this exemption limit can go up to 1 lakh. So that is the amount, 1 lakh, because senior citizens health treatment and the expenditure will be more. Now, expenditure incurred on payment of rent. This section is very, very important. Section 80GG. This will be there for computation also, and theoretical aspect also. This is very, very important. One point I want to tell you important about this section is, usually any deduction, whatever, see the rent paid or HRA, in the case of HRA, house rent allowance, we have learned in salary chapter, actual HRA received, less exempt list of the following. In this section, what we can see is there is no actual receipt and you are reducing. Three items are there eligible for deduction. Whichever is the least value, they can claim as deduction. That is the adjustment we are doing. So please remember that, don't make any mistake. So here deduction is allowed to individuals for rent paid. Here also one condition is there. Assessee or spouse or any minor children is not having any self-occupied property in their name or any residence, house property registered in their name. And at the same time, they are working somewhere else in other city, and there they are staying in a rented accommodation. It can be for employment, it can be for business, it can be for profession. So then that rental payment they can claim as a deduction. So first thing you have to remember, deduction is allowed to individuals for rent paid. So I told you the reason why. They are not living in their hometown, they are coming to a different city for employment, business or profession. Now, the assessee must be living in a rented house due to his employment, business or profession. The same point I told you, it's mentioned in the PPT. Now, he's not getting any house rent allowance, HRA. We have learned in salary chapter and how when an employee is getting house rent allowance. So, if he want to claim this deduction, he should not be getting house rent allowance also. Now, he or his spouse should not have any self-occupied house in India. So that is another important thing. If one person is working in a city, assessee is working in a city and his family is back in the hometown with the self-occupied house, then he cannot claim this exemption. Here the condition is that assessee and the spouse is not having any self-occupied house property in India. Next point is, either the assessee or his spouse or minor child should not own any house at the place of his residence. They don't have a residential house property in their name. Next is deduction allowed is. I told you there is no actual amount received. Three items we are giving, whichever the least value we will take. First is statutory limit of 5,000 rupees per month. 5,000 into 12, so 60,000 is the for the statutory limit. Second is rent paid minus 10% of adjusted GTI. So whatever the rent paid will be there in the question. So adjusted GTI we have learned in section 80G how you calculate adjusted GTI. Actual GTI minus LTCG minus short-term capital gain, where securities transaction tax is paid, minus deductions from 80C to 80U, except section 80GG. That is how you will calculate adjusted gross total income. So 10% of adjusted gross total income, rent paid minus 10% of adjusted gross total income. Next is or 25% of adjusted gross total income, whichever is less. So the three lines we will take, whichever is less we will take. Now adjusted GTI, again I have given the explanation. Adjusted GTI is equal to GTI, that is the gross total income, minus LTCG plus STCG on shares covered under securities transaction tax, plus income referred to in section 115A, plus all other deductions under section 80C, that is from 80C to 80U except 80GG. Now the next question, next deduction is contributions given by companies to political parties. So this is, you have to remember that when a country is in need, central government or state government is requiring the support. Companies, those who are profitable companies, they will volunteer. They will give so much donation for the central government or the state government, because they need certain favors from the government, and in times of distress for the government, it's their duty to help them. So now this COVID-19 also, you know that Tata Foundation, Infosys Foundation, all these major companies, they Reliance, they have paid so much amount for the central government and state government. So this, at the same time, if the companies are giving any political donation to the parties, especially at the time of election and all, they will request that. So at that time also, whatever contribution they are making by check, they are eligible to get this exemption. That also it's 100%. One, remember one thing: if you're making cash payment, you are not eligible to get this exemption. So contributions given by companies to political parties, section 80 GGB, deduction of 100% of such donation is allowed, whatever the full value, provided the payment is made by check. Next is political party, means any political party registered under section 29A of the Representation of the People's Act 1951. Some examples, if you take BJP, Congress, CPI, CPM, Aam Aadmi Party, all these are examples. So any political party, if they are giving any deduction, they can claim this. Next, we are talking about royalty and patents. See, being an author, I used to claim this deduction, so it's close to my heart. So I told you royalty is coming under, royalty or patent is coming under income from other sources. Please remember that. See, income from other sources, when we'll take royalty, all the incidental expenses, this will be same in the case of patents also. We can reduce the expenses from the income, and then only the balancing amount only we will take it as income from royalty. What all the incidental expenses? Typing charges, editing charges, purchase of textbooks, library reference, Wi-Fi, all this can be claimed as a related expenses. Purchase of paper, purchase of stationery, so all these expenses can be claimed for royalty. So the remaining value we will take as income from books, writing the books, or royalty in income from other sources. Now from that value we can claim a deduction when it's coming to the gross total income. So you remember, it's allowed to individuals. This is royalty for writing books, and it's allowed every year. Deduction allowed is actual royalty income or rupees 3 lakhs, whichever is less. So this is the deduction allowed. Next is patents. In the case of patents, section 80 RRB. You know that now most of the youngsters, they are coming out with startup proposal and all. Most of the engineering companies, the students, engineering colleges, the students are coming out with patent rights. They are getting patents registered in their name. New inventions. I have seen in one engineering students in Kerala, they have developed something, one like an ATM machine. So if you go and put your card there, you will get the sanitizer free, you will get the gloves free, you will get the so many things related to COVID we can claim. The mask you can pay and you can get it. The sanitizer pouch you can get it. So like that, it's very good, like an ATM machine they have invented, and they got the patent also. So in that case, what the exemption they can get? Now allowed to resident individuals. So here also I remember, NRIs are not allowed. Not ordinarily residents are also not allowed. It's allowed only for residents. Now this deduction is allowed for developing patents and earning royalty. So the same as royalty I have explained, incidental expenses we can reduce. The remaining amount only we will take it to income from other sources. Now it's allowed every year. Now deduction allowed is actual royalty income or rupees 3 lakh, whichever is less. So the same as royalty. This deduction is same. Now this is for two sections, 80TTA and 80TTB is for savings bank interest rates. When I am talking about savings bank interest rate, I have to tell you, see, banks will reduce tax deducted at source, TDS, if it is a recurring deposit or if it's a fixed deposit. 10%, that is the standard they will reduce. When we will file the tax returns, if you are in the 10% tax liability, you don't have to pay any extra tax. But if you are in 20% tax bracket, 10% extra tax you have to pay. If you are in 30%, you have to pay another 20% when you at the time of filing the tax returns. But in the case of savings bank account, TDS is not done by the banks. So this, when they are reporting savings bank interest, they can claim a deduction of under section 80 TTA. In the case of senior citizens, it is 80 TTB. The conditions are similar, only the category is different. So here you have to remember, 80 TTA is allowed to individuals and HUF. Now allowed to interest on deposits in savings bank account, cooperative society and post office. See, post office we have seen that if it's single account holder, up to 3,500 it's exempted. If it's joint account holder, up to 7,000 is exempted. Now deduction is allowed every year. Deduction allowed is actual amount of interest earned during the previous year or rupees 10,000, whichever is less. So this, if the amount earned is 12,000, 12,000 compared with 10,000, he will get only 10,000. If the amount compared is 9,000 versus 10,000, then he will get claim or 9,000. Next is same section only for applicable for senior citizens. Interest income from deposits held by senior citizens under section 80TTB. So you have to remember, in the case of senior citizens, most of their investments will be either as fixed deposit or in the savings bank account. They will not take a risk at that stage because whatever income, whenever they want to withdraw, it should be readily available. So they will always opt for this. So it's a higher rate of deduction is needed for the senior citizens because most of the people, their deduction in respect of interest will be in the case of senior citizens, in the case of bank savings only, either in the case of saving, either in the type of savings bank account, recurring deposit also they will not go for that. Whatever is there, they will invest in the fixed deposit and they will be collecting interest and they will be meeting their expenses. So deduction is allowed to senior citizens. So senior citizens also can claim this. That means those who are above 60 years of age. For interest income from banks, post office and cooperative societies. Then I explained last slide also. Post office, whatever the exemption is available, 3,500 or 7,000, beyond that if they are getting, they can claim this exemption. Now SSCs getting this deduction cannot claim deduction under section 80TTA. So both the sections they cannot claim. If it's a senior citizen, they can claim only 80TTB. If it's ordinary people less than 60 years of age, they can claim only 80TTA. Now deduction allowed is rupees 50,000 per annum or actual interest earned, whichever is less. Now the last section for section 80, 80U, that is physically handicapped or mentally retarded assessees. If the person filing the tax returns itself, if it's a differently abled person, then he can claim this deduction. Now here you have to remember that if you want to prove that he is differently abled, he has to get a letter from the medical practitioner with the government department, government doctor working in a government hospital. There you have to remember the two types of certificates he can get. One is ordinary differently abled. Second is severely abled. Severely differently abled. Ordinarily abled meaning deduction will be different. Severe, in the case of severe disability, it is 1,25,000. Ordinarily differently abled meaning it's only 75,000 deduction. See, that is what I'm going to explain. Allowed to resident individuals. So each category who is eligible for that, it's very important. That will be always the first point I'm explaining. Now, if the assessee is blind or medically handicapped, he can claim this exemption. Now, medical certificate to be produced from the government doctor. So, that only will be applicable. Private hospitals, private doctors, it's not eligible to claim this deduction. Now, it's allowed every year. Now, deduction allowed is 75,000 per year if it's normal disability. If it's severe disability approved by the government doctor, the deduction is 1,25,000 per annum. Now, two problems I have worked out. First one is ATC and ATGG. The last problem is different sections. So, you will get an idea of how the sections and the deductions. Now, Mr. R has submitted the following details about his income and investments. Compute his taxable income for the assessment year 2021. So, first one is professional gain 5 lakhs. So, we have to calculate the gross total income. Rent received from house at Delhi, he is working in Kanpur. So this condition, if he has to claim 80GG deduction, you have to remember that he should not have, his spouse or minor child should not have a house in anywhere in India in their name, registered in their name, and they don't have a self-occupied house property. He is living with the family for the purpose of employment, business or profession in a different city other than his hometown. So he is paying rent. So that eligibility we are calculating. Now municipal rent received from house in Delhi, he is working in Kanpur. So Delhi let out house property 18,000 per annum. It can be in the name of his parents or anything like that. It's not in his name. Then only he can claim the 80GG deduction. Now municipal taxes 1,500 per month. Long-term capital gains on sale of plot 10,000. This we have to adjust with the adjusted gross total income also. Part-time salary as lecturer in a college, it will go for salary income. Rent paid at Kanpur. This is what we are going to adjust. Now interest on government securities. It is 19,000. It's not 6,000. It's a typing error. It's 19,000 for the interest on government securities. Now, investments in public provident fund, it's 15,000. So, ATC deduction also he will get. So, the first table is table showing the computation of taxable income of Mr. R for the assessment year 2021. First is salary income, 1,64,000, part-time employee. Standard deduction under section 60, this year it is 50,000. Last year it was 40,000. So 50,000 you will reduce. Income from salary is 1,14,000. Now rental income, other values are not there. Standard rent, fair rental value, all are not given. So annual rental value, we are taking it as annual rental value is the rental income what is given in the question. So it is 18,000 less municipal taxes 1,500. So you will get net annual value 16,500. Now less standard deduction under section 24. You know that let out house property, 30% of net annual value is allowed as a standard deduction. So 30 by 100 into 16,500, it's 4,950. So income from house property is 11,550. Now we are coming to the other sections. Income from profession 5 lakhs. Income from long-term capital gain 10,000. This we have to take for adjusted gross total income also. Income from other sources, it's 19,000. See, I told you in the question 6,000 per month is wrong. Actual value is 19,000. Gross total income 6,54,550. Now less deduction under section 80C. You know that 80C qualifying amount they can claim up to 1,50,000. But here he has made a contribution in the public provident fund 15,000. So that fully we can allow that. 80C deduction is 15,000. Now less deduction under section 80GG 945. That how you are getting that value I am explaining in the next slide. So here deduction under section 80G 9,045 and 80C 15,000. Both together 24,045 you have to reduce from the gross total income. Then you will get the taxable income 6,30,505. Now table showing the computation of deduction under section 80GG. So here you have to remember I told you there is no actual amount received. 3 values are there, which is the least value they will take. So statutory limit I told you 5,000 per month, 5,000 into 12, 60,000. Please remember that it will reduce substantially. See, if he is getting the rental accommodation only for 8 months, this we have to reduce it to 5,000 into 8. Here it is for the full year, that is why we are taking full year, 5,000 into 12. Now rent paid minus 10% of adjusted GTI. Adjusted GTI we have to calculate. That is gross total income minus long-term capital gain minus 80C deduction in this case. So the value is 6,29,550. So this you have to remember, rent paid minus 10% of adjusted gross total income. So you are getting 72,000 minus 62,955. So you are getting 9,045. Now last point is 25% of adjusted gross total income. So adjusted gross total income 25 by 100 into 6,29,550. So it is 1,63,638. So the least value is 9,045. That is how we have taken in the previous slide. 9,045 as ATG deduction. Next is problem 2. This has many adjustments from the following particulars of income of Mr. C, a physically handicapped assessee. That meaning 80U is applicable in this case. It is not mentioned that severe disability, so he can claim 75,000 under section 80U. See, if you will not read the question properly, you will not get this information. So here, compute the taxable income for the assessment year 2021. Salary received from employer 2,50,000. Annual rental value of let out house property 15,000. Interest on loan taken to purchase self-occupied house property 20,000. So you have to calculate salary, computation of house property. He sold another residential house property on 1/4/2019 for 24 lakhs. The fair market value of the house property as on 1/4/2001. This is 1/4/2001 was rupees 6,50,000. Find out the capital gain he had invested. Find out the capital gain. He had invested rupees 4 lakhs in securities of National Highways Authority of India on 1/6/2019. So you have to remember 1/6/2019 is important because if they are they are investing securities in National Highways Authority of India, within 6 months they have to invest. See, he sold the property on 1st April. Now 1st June itself he is investing in National Highways Authority of India. That means that we can allow the exemption. If it's after 6 months, as we have learned in capital gain chapter, it is not allowed. Here we can allow that. Cost of living index for 2019-20 is 301. Now, the next thing is he won rupees 40,000 in race horse and 2,000 from a lottery. Next is he paid rupees 6,000 by check as premium to secure the health insurance policy of GIC for his family. So 80D deduction also he will be eligible. Now his mother, who's dependent on him, is suffering from cancer. He had spent rupees 46,500 for her treatment. So diseases of a dependent person, that also deduction will be there. His minor son is mentally retarded, and for his special education, he had spent rupees 15,000 for the current previous year. So that is also important. So this also he will get the deduction. He has donated rupees 10,000 to Karnataka State Chief Minister's Relief Fund. This is 80G. So 80G also you have to calculate. See, I told you three state governments, Maharashtra, Karnataka and Jammu and Kashmir. The State Chief Minister's Relief Fund. It's 100% deduction without limit. Now he gave rupees 2,000 for repair of a notified temple and 1,500 to approved municipal authorities for promotion of family planning. So 80G with limit donations are also there. Now, first thing what we are going to do, we are going to calculate the gross total income. Table showing the computation of taxable income of Mr. A for the assessment year 2021. Salary income 2,50,000 less standard deduction 50,000 this year. So income from salary is 2 lakhs. Now, second is we are going to calculate the let out house property and self-occupied house property. So let out house property, annual rental value is equal to same as, uh, there is no municipal tax. So net annual value also is the same, 15,000. Now you have to let out house property, you have to allow 30% deduction under section 24, under section 24. So that is 15,000 into 30 by 100, 4,500. So income from let out house property is 10,500. Now net annual value of self-occupied house property is nil. But they have taken a loan for self-occupied house property 20,000. So loss from self-occupied house property will be 20,000. Now we have profit in one. Let out house property 10,500 profit. Self-occupied 20,000 loss. So we will adjust within the head itself, and the remaining value is 9,500 loss from the house property. Next is sale price of residential house property. Capital gain we are calculating 24 lakhs. Index cost 6,50,000 into 301 divided by 100 because it's 2001 value. So 19,56,500. Long term capital gain 4,43,500. Now he has invested in section National Highways Authority of India securities within 2 months. So he is eligible, he can claim 4 lakhs exemption. So taxable capital gain is 43,500. Income from other sources, two items are there. Race horses 40,000, lottery 2,000. So total is 42,000. Now he has to take the gross total income is 2,76,000. Now Mediclaim, you know that he has paid to insurance and paid to GIC by check. So 6,000 can be allowed. Deduction under section 80DD, 40 mentally retarded child. So that is 75,000 he can claim. Next is deduction under section 80DDB, cancer patient of the mother. Cancer patient, mother is a cancer patient and he had spent 46,500. So how you compare? He has not received any amount from the insurance company. So 46,500 or 40,000, whichever is less. So 40,000 we are claiming. Now deduction under section 80U, it is not severe disability, so he can claim 75,000. Now deduction under section 80G, we are going to calculate in the next slide. 2,08,500. No, sorry, deduction under section 80G is 12,500. So all the deductions together we are getting 6,000 plus 75,000 plus 40,000 plus 75,000 plus 12,500, you are getting 2,08,500. So taxable income is 67,500. Now table showing the computation of 80G. I hope that you have learned 80G now because we have learned many problems. Now without limit donation, Chief Minister's Relief Fund, that I told you, three state chief ministers, Jammu and Kashmir, Maharashtra, Karnataka, you will get 10,000 full exemption. Now with limit donation, two items are there. Family planning 1,500, renovation of temples, it is 2,000. I have interchanged this. Actually family planning is 1,500 and temple is 2,000. Now adjusted GTI, only one GTI minus long-term capital gain minus all these sections 80D, 80DD, 80DDB and 80U. So the adjusted GTI, when you reduce 2,76,000 minus 6,000 minus 75,000 minus 40,000 minus 75,000, you will get 80,000. Now qualifying amount is 10% of adjusted GTI or with limit donation, whichever is less. So with limit donation is 3,500. So 80,000 into 10 by 100 is 8,000. Comparison is between 8,000 or 3,500. So 3,500 is the eligible amount. Now family planning full value they will get. It is 1,500 for the family planning. Approved temples 3,500 minus 1,500. You will get 2,000. In that you will get only 50%. So 2,500 and 1,000, it's 2,500. That is how you are getting the full deduction. So total deduction 10,000, 1,500 and 1,000. Total deduction is 12,500. So this is what I want to explain with the help of deductions from gross total income and different sections. We have learned 80C, 80G, 80D, 80GG, 80U. All these sections are important. And uh, the savings bank interest 80TTA, 80TTB, and this so many sections, royalty, patents. Some questions you can expect for the theory, some questions definitely problems also. 80G, 80C, 80DD, 80G, all the sections are important. So I hope it's clear to you what I have explained, and I want to see you with the last module, rates of income tax. So the rates of income tax I will give, and the last module, module 14, with that we will complete the syllabus of income tax for both the semesters. So I want your feedback. I'm not getting enough feedback. When you give me the feedback, then only I can improve if there is any mistake. And then one more thing I have to tell you, full syllabus I have included. It's so much hard work. So please make use of this. Anywhere in the country, the syllabus is same. So any university, you share this. If you're happy, you share this information with others working in different colleges, different states, because income tax syllabus is same. Nobody can change the syllabus. And then subscribe to the channel Ace Commerce with Dr. Alice Mani. So next, after this income tax, the 14th module, I am going to do CBSE 11th accounts and business law also. I am uploading the videos simultaneously because business law is also a difficult subject and our students are learning in the first semester. So to help them with my experience and my knowledge, I am trying to upload the videos in the YouTube. I want your feedback. I want your encouragement. Then only I can get motivated. I can do more for the students. So let everybody get a nice experience. Let everybody make use of this opportunity. Thank you for watching. Keep seeing the video. Tell others about that if you're happy. If you're not happy, inform me. Thank you.